Connor, how's it going?
Good. How are
Good
you?
to see you. So today, obviously, the housing market for buyers can be difficult, and we've kind of been chatting this past week about the three main, let's say, pain points of buyers in today's market, and kind of concluded that it's inventory, affordability, and then just cash and their savings. So I want to try to tackle the inventory part first, and then I'd love to be able to ask you a few questions about how people can combat affordability and the cash reserves to be able to get into homes even in this tough market. So obviously inventory right now is starting to creep back up, but we are still fairly low, which makes it difficult for if you're looking for a really specific house, you may need to wait a while. And it's also helping support our higher home prices, which is good for home owners, but for home buyers that are trying to get their foot in the door with the market, makes it a little difficult. Would you agree?
Yeah, I mean, and realistically, that really plays into the affordability aspect. Is the values are holding high even with interest rates going up, and that is what's hurting people with their affordability. The first thing people ask is, what's the payment on this? Because that's what everybody cares about at this point. Where 2 years ago, that wasn't necessarily what people were most worried about. People were making offers without even going in the house. So now it's not so much the home; it's what they can afford, and it's getting tougher and tougher. But thankfully, we do kind of have some options to kind of combat that. I mean, we have 2-1 buy downs, temporary interest rate buy downs to help kind of ease into that monthly payment, that higher interest rate, with the hope that rates do come down, which is kind of how things are looking to trend over the next year to 18 months, is eventually have those rates come down.
Okay. And so with the temporary buy downs, obviously, it's a seller credit that then the buyer gets the benefit of a maybe more affordable monthly payment for 1, 2, 3 years, depending on the program they're using. If rates do come down in the next 12 to 18 months and that buyer is looking to refinance, what does that process look like? How easy is it? Is it going to cost them a ton more money to make it even worth it?
Right, so the refinances are typically nothing out of pocket other than maybe an appraisal if we're trying to get more value out of the home. And the benefit, if you do get that seller credit for a buy down, is any excess, if you haven't used it all, goes straight back to a principal reduction. So you're getting that money anyways, even though it's not being used towards bringing your payment down anymore, it's still going towards your principal at the end of the day. So it's all kind of your money that's kind of set aside to make your payments lower. And then if you do refinance, it does go back to you anyway. So it's not like that money's gone or it's going to you regardless. And then also, thankfully, the refinance process is really easy. If it's 12 months, I'll need an updated W-2 and maybe some pay stubs and a mortgage statement. It doesn't take a whole lot from the borrower, not having to get a bunch of bank statements or anything too crazy. And it is a very easy process to get that payment down permanently and not be hoping that it's going to come down with those temporary buy downs.
Okay. And one other thing that buyers may be looking at right now in terms of affordability, just looking at purchase price, would be a temporary buy down versus just a price reduction. In your experience and with what you see in people's finances, what would kind of be the best option for someone that is looking for maybe just the best monthly payment or the best long-term solution?
Yeah, so I mean, for the best monthly payment, getting that as a buy down is certainly going to help you out the most. Or even just paying points to buy down the rate more is going to help you more than 20 grand off of purchase price maybe.
Oh wow.
So that aspect of it, monthly payment, is going to be affected more by messing with the rate. But depending on if you're an investor, I mean, everybody wants the best deal. So if you're looking for that appreciation and that's where you're looking to kind of make money, maybe it is more important to you that you do get a reduction in the purchase price. It's case by case, client by client, really what's important to them.
Yeah, I mean, ideal scenario, you get a price reduction and a buy down.
we can hope.
We can hope.
We can do that.
Okay, great. And then you mentioned briefly some ways that home buyers can get into properties for maybe less money down, or some down payment assistance programs. What do we have here in our area that buyers can use?
Yeah, so down payment is another huge hurdle for people these days. Things are more expensive, tapping into that affordability aspect, and people don't have as much in savings. So we do have the Washington Bond Program in the state of Washington, which is 4% down payment assistance that helps people get into homes with next to nothing, depending on if they can get a seller credit to help offset some closing costs. We also have the Oregon Bond Program, which is very similar, 4% down payment assistance to help out with that initial down payment. And if we can get some seller credit, also huge to help offset that cost. We have veterans can get in with zero down with a VA loan. We have USDA loans, which is a rural development loan. So there are options to get into something with little to nothing out of pocket, which is awesome for people these days.
And some people think that rates may skyrocket if they don't come in. You know, like obviously for a bank, it is a little more risk to do a zero down. But some of these I think are government backed. So what do the rates look like compared to maybe if they did put a little bit down? Are they still competitive?
They're still competitive. The Washington Bond and Oregon Bond Program are rates that are set by the state, so we don't have a ton of flexibility to really be competitive because it's the same just about everywhere. That's where it comes in for me, is giving a great service and helping the client out in the best way possible. The government-backed loans such as USDA and VA are very, very competitive, very low rates. The VA loans is one of the best loans out there because we do want to support our veterans and they deserve it. So anybody with VA benefits, it's huge to be able to get in with nothing out of pocket and having an awesome rate.
Okay. And then with these down payment assistance programs, can you still tie in these 2-1 buy downs to buy down your rate temporarily still?
So we can buy the rate down permanently. So you can do a one-time buy down, but unfortunately there aren't any avenues to do a 2-1 buy down or anything like that.
Okay.
But we can buy the rate down for a point and a 1% cost and affect your payment that way.
Okay. So if someone's looking for a 2-1 buy down, they'd likely have to do some other sort of loan that doesn't include down payment assistance.
Correct.
So it's really, do you want a lower monthly payment potentially, or do you want to come in with less money?
Right.
Kind of.
And
give
again,
take.
everything is client, but every client's different.
Yeah.
Everybody has a different scenario, and it's really about what's important.